Hey there, everybody. Thomas Wood with Basecamp Trading. It is Friday, January 6th, and we're going to take a look at bonds, actually, and more specifically, one of the setups from the futures trading room today. Now, we had non-farm payroll today. As you know, it's the first Friday of the month, so non-farm payroll comes out on the first Friday of the month. And this is one of my favorite setups to trade during announcements like this. And it's not intended for a huge move. It's designed to get in and get out with around $300 a contract profit roughly on the trade. So what you look for is right here. You can see where we spiked in volatility. And this big spike in volatility, we're looking at 30-year bonds on a 500 tick chart. So you had a big spike in volatility when the announcement comes out. You wait for the market to pick a direction. Normally that's going to happen within about 10 to 15 minutes or so. So you can see we picked a direction. We started trending down. All right. And then once you've picked a direction, you look for a consolidation period, something like we had right here. All right. And we'll look for a higher pivot low, for example, within the context of an overall down moving market. Once we have that higher pivot low, we'll draw our trend line across that pivot low, and we look for a break through the trend line to trigger the trade. So, and resume the initial move. So right here, you can see that's where you broke the trend line. That was at 152.9. We dropped all the way down to a low before bouncing back up at 151.29. Now, if you were in the trading room, you know, I walked you through this whole thing. This was about a 13 tick move, which is about $400 a contract, $400 to $500 a contract in bonds. But we're not taking out the entire move because obviously we're not going to get right in at the start. We're not going to get right at the bottom. The way you manage the trade is once it starts moving your direction, you trail it by one price bar. So you trail it all the way down and you're getting out at about 152.1, which means you were in from about 8 or 9 and you are out at 1. So you have about 7 or 8 ticks in profit, or just under $300 a contract worth of a gain, which is basically what we're looking for. Now, the thing that's good about this setup is it does not take very long. So we're taking 2 or 3 ticks risk with our stop loss, putting above the previous bar's high, and we're in and out very quickly, and it should run our direction very quickly, just like it does here. So this, you can use this strategy in a lot of different markets. If you're in the trading room with me during announcements, I walk you through these setups as they're occurring. I'll say, okay, now we're in the consolidation period. Look for the breakout to resume the initial move. But that's just one example of one of the breakout trades we take after news announcements. The other thing I got to say with this is make sure you're using a tick chart. This will not work on time-based charts, okay? Because time charts do not show you enough information. For example, you see here on the 500 tick, we had all of this price action here. But if you go and you look at something like the 2-minute chart, back where that happened, the consolidation is not anywhere near as well defined. And if you go back and you look at the 5-minute chart, the consolidation is not there at all, hardly. Alrighty. So that's it for today. I hope it helps. I will see you in the trading room bright and early Monday morning. Have a great weekend. And until next time, happy trading.